Welcome back to another video with Money Finance Freedom, your ticket to financial freedom. And today we're going to be talking about the not so free stock market surrounding meme stocks. Now, there's been a lot of controversy surrounding AMC, GME, Nokia, BlackBerry, and several other stocks. Robinhood, Webull, and a lot of other trading platforms were in hot water. Why? Well, we're going to look at this scenario as peculiar. Once in a lifetime, probably never going to happen again. Short squeezes do happen, but not on this scale, and not with the outcome that we've seen. Now, if we look at the scenario, we're going to see that Robinhood, Webull, and a lot of these trading platforms stopped trading due to volatility and an increase in overall expenditures that needed to be covered by their clearinghouse. We're not going to get into the technical side here, but really everybody got frustrated that they were no longer able to buy a stock that they wanted. They were capped, they had limits, and even if you could cover your entire payment, you had enough cash in your portfolio to buy a stock, you were unable to at times. Now, I'm going to get into all of this and who made exactly $700 million during this time on GameStop. But first, go ahead, hit that like button, hit that subscribe button so I can make more content just like this. All right, so we're going to start off by looking at this article. A hedge fund of all people made $700 million on GameStop. This is an article posted by Juliet Chung on Wall Street Journal. Just wanted to show you where you can get some more information on this. Go ahead, take a look at that page, give it a good read over, and see the entire scenario breakdown. Also, watch that video if you want a quick rundown of how it's all played out. Now, it's quite interesting, right? About 8 million people joined a Reddit page. They all said that the stock market was hedged against a company that they all loved. They wanted to make money, and some of them made millions. A stock that was trading at just $3 in April of last year during the pandemic shot up to over $500 a share. Now, this stock had extreme momentum until it was halted by a lot of the trading platforms. The SEC did not step in here. It was entirely financial institutions. Wall Street Bets and other platforms like it, such as Twitter, Instagram, YouTube, and any other social media, was talking about sticking it to the man, holding hedge funds accountable for shorting a stock to such an extreme stance in order to make money. At 130% of outstanding short shares being out there, people saw this as a great opportunity for a short squeeze. Without getting into the technical analysis, basically, the stock was shorted so much that it gave us the ability to invest, push money in, make people cover those short calls, and therefore buy more stock at an elevated price, which then pushes the stock even higher. It's a compounding effect. There's plenty of videos on it if you want to go watch it. Today we're going to talk about the ethical side of it. Is hundreds of thousands of people threw money into this stock because hedge funds shorted it at such an extent. So everybody was in Reddit saying, diamond hands, hold this stock, hedge funds don't deserve the money, steal from the rich, give to the poor, all this, and guess what? A hedge fund ends up on top. The individual retail buyer that ended up with the most money ended up with several $1 million, which is life-changing. That's fantastic. But through all of this, there were multiple hedge funds that ended up making $700 million on a meme stock. And who do they have to thank for that? Us. We did that. We went online, we banded together, and we put money into several stocks. GameStop being one of them. We pushed this stock from $3 to now a steady $90 a share. We're going to see this trade line right here gradually shoot up as we get volume and then explode. Then, based on the financial institutions, they handcuffed us and said we are not allowed to trade anymore, and it brought the stock back down. Even through all of that, we're seeing GameStop start to settle back down at this $90 price point. It could still drop. I'm not saying that it won't, but overall, all of the hedge funds that made money on this, they got out of their positions. They knew that they could buy and sell when they want because they don't have clearinghouse problems. They're not trading on Robinhood and Webull, but they saw what happened with the market and they got out. And they got out with a lot more money than we ever could. Now, it just doesn't seem fair to me that as a retail investor, I can't put my entire life savings into a stock. Now, we might want to thank Robinhood and Webull because some people would have done that. Some people, when the stock was trading at $300, $400, $500 a share, would have put half of their retirement account, which some people did, and there's evidence of it on Twitter and Reddit, into a stock that ended up plummeting. Now, it might have plummeted because of Robinhood and Webull, we don't know, but eventually it would have come back down and we would have lost a lot of money. What ends up happening with retail traders is you trade against yourself. You trade against other retail traders in the market, while hedge funds understand financial analysis, value trading, value investing, and know when to get out of the market. And they also hedge their bets a lot better than retail markets or retail shares because they have more money to do so. They're diversified, they know when to get out, they can make multiple buys, multiple limits, and multiple stops. Now, as retail investors, we have to either usually be all in or all out on a stock, and as it comes back down, many people don't sell their positions and end up losing money in the long run. Now, luckily, I do believe that a lot of hedge funds were hurt in this process, so good job, Reddit. You did your job, you came out on top overall, but in the long run, it's a unique story. Retail investors have a lot of power and no power at all. Hedge funds are always going to be in a little bit more control than we ever will. That's just what we're going to have to live with. And we're going to keep trying to have to find opportunities like this. And hopefully one day we can make a hedge fund of our own. We'll call it Wall Street Bets. That's it for me today, everybody. Make sure you like and subscribe to the video. I'm going to be making more videos just like this one. So comment down below what you want to see.